Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. China is now home to the world's 14th largest money market fund. While 14th might not seem like much, what makes it remarkable is that the fund is less than a year old and not attached to any of the nation's powerful state-run banking groups. The fund, called Yuebao, is the creation of e-commerce giant Alibaba and Tianhong Asset Management, and it's shaking up China's financial industry. As of January 15th, Yuebao held around $41 billion in deposits. Customers are attracted by the higher yields than are offered by the heavily regulated state banking sector. In fact, Yuebao has become so popular so quickly that a number of imitations have already launched that likewise have had no trouble enticing deposits. Chinese banking customers are growing increasingly sophisticated about financial products and are tired of receiving interest payments near or under the rate of inflation, a policy known as financial repression. This also explains the phenomenal growth in wealth management products that fall under the umbrella of China's notorious shadow banking industry. Chinese leaders, including Central Bank Governor Zhou Xiaochuan, have announced plans to liberalize interest rates on bank deposits. But Chinese internet companies like Alibaba and now Tencent and Baidu, too, are taking advantage of market demand before Beijing can follow through on its reform promises, which could take another 2 years. Tencent owns China's most popular mobile messaging service, similar to WhatsApp, called WeChat, to which it is tying its financial product. Tencent's fund, called Li Cai Tong, is currently paying an impressive 7.4% seven-day annualized yield. This is nearly a full percent above the rate offered by Yuebao. WeChat, with over 400 million users, is attempting to take away some of Alibaba's 80% market share in Chinese e-commerce. The Wall Street Journal's Grace Zhu and Paul Mosier report that WeChat's fund is no doubt aimed at competing with Alibaba's service. They say it's also likely a ploy by Tencent to entice users to link their bank and WeChat accounts. Having the two linked will make it much easier for users to pay for goods on its small but growing online shopping platform. While WeChat hopes its network of online shops takes off, Alibaba is still far and away the largest e-commerce player in China. Alibaba's payment affiliate, known as Alipay, reported that its mobile payment platform showed huge growth this past year. In fact, Alipay says it completed more mobile payment transactions in 2013 than popular US-based PayPal and Square combined. Last year, more than 100 million users completed over 2.8 billion transactions using mobile devices, with a total value topping 900 billion yuan, or nearly $150 billion. Alipay says that at the end of last year, it had nearly 300 million real-name users, or nearly one-half of China's 618 million internet users. Alipay says its users completed 12.5 billion transactions in 2013. Alibaba is expected to sell shares this year in what is the most anticipated IPO since Facebook in 2012. The company's value has been estimated anywhere from $115 billion up to over $200 billion. China Economic Net reports that last year was widely seen as, quote, ground zero for Chinese internet finance. CE.CN points to financial innovations like that from Yuebao, but also developments in P2P lending and the just discussed mobile payments. They write how these have swept over the fields of wealth management, loans, payments, as well as settlements. While state-owned banks await for officials to free up rates paid on deposits, giants like the world's largest bank, ICBC, and Bank of China are offering some innovative financial services of their own. And while these Goliaths may never be as nimble or creative as internet firms, they're not about to fall to David, but they are being chased around the track, and the exercise should do them some good. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English-language broadcast media. Our full episode can be seen on our website, BONTV/biz-wire. In just a moment, we'll continue with more insight into the big picture of China's economy.